Hello, this is Stockfather, and though we're going to talk about AMC, I'm going to show Apple as an example. Now, if you look at this is a year-to-year type of example, so um, yeah, and the price was actually quite a bit lower. It got all the way down to the 20-some cents at one time down here, where it reaccumulated over a whole year, which is pretty much what AMC's been doing. It had its up thrust, downward projection, but they had a spring here. But what I wanted to show this for is somebody asked in the comments basically about reaccumulation. And as you see, when this took off and it started making its thing, now that you got to look at this down here, this is over several months period. If it does this on AMC when it gets up to the $20 level, which is a reaccumulation, a lot of people are going to probably be scared that it's a distribution like this, coming down, because they scared them enough times, right? That they're not looking at the big picture, right? Like at one time, Apple was way up here, so it goes through this reaccumulation here, then pushes up, reaccumulates, pushes up, reaccumulates, pushes up, and it kind of makes a top, and it makes it look like it's going to go down, but it's actually another reaccumulation, which goes up, reaccumulation pushes up, reaccumulation pushes up, reaccumulation pushes up, and this is where it runs. So they have a bit of a squeeze here from shorts, and then they reaccumulate here, and a lot of people might have thought it was over, but it pushes up. And then even here, it looks like it distributes, but they reaccumulate here, and then they push it up. This is another reaccumulation zone, so far and so forth. See how what a reaccumulation looks like? It goes up, it reaccumulates, goes up, reaccumulates, goes up, reaccumulates. Now, these are over a year period, so you got to think this is several weeks that's reaccumulating, right? In some cases, just a week maybe, but at least several weeks on most of the cases. I can't zoom in because that's how TradingView works. Now here, I would have thought the play was over, personally. After I made this, I would have been like, "Wow, let's give it back to far." But it doesn't have. It has the traditional look of a distribution, but the one place where a distribution can catch is basically where it did. Is where the first leg kind of where the other one started was. It can go down to that, and then come back up, which is what it did. And we're looking at $1.54 here, but over time, and these are year times, AMC would probably be quite a bit faster. It did a lot, right? It's just gradually accumulating. Sometimes it'll distribute, but catches, and pushes up again. But this is what could happen to AMC. And I guess I had a thing marked out for Apple that didn't pay off. See, same thing happened here. I saw it as a sign of weakness. It wasn't, and is gradually going up. It's actually doing exactly that pattern that I kind of explained. It kind of boosts up. It's coming up. This is what this is probably this possibly could run. Apple could possibly run again. So. I don't know. Seems like it's more likely to distribute, but I don't see how it differs from when they did this and then it right up and peaked and kind of did this thing. So Apple's looking pretty healthy to me. It's already way out of the areas I thought it was going to come down to. But it could be UTAD. Anyway, we're not working on Apple, so we're going to AMC real fast. I just wanted to show that because someone asked in the comments kind of about that, and I thought I would show an example of how that works. So it won't be as stretched out as this is, if that makes sense. before it goes up again. And then it would probably go up to an area above this to redo that before pushing up again. And what it does is it ultimately just slow squeezes the shorts out, and no one else is exiting the play because, why would you? As long as you don't see big, huge volume spikes like this at the top, then you should be okay. And at the top, I mean, wherever, when it starts to take off, wherever it goes. Like you see over here, it's got a lot of volume on the top parts. What you want to see is a lot of volume here, which is what you got at the bottom parts, and then it kind of take off. Now, timing's kind of weird. If you base it off of the previous down thing, there's about 3 weeks of sideways here, and it will stay more lower to this bottom area. It should stick to this line. It should have one push up, and then when it comes back down, it shouldn't come close to the line, but it probably will stay pretty close to the line. Today, it shouldn't do anything radical right here, because what it's doing, it's doing more of a supply grab, and this is still done by the main composite operator. They're in control of it. Other institutions are waiting to see a sign of strength, and smart money's waiting to see a sign of strength before they get in. That's basically what smart money does. Is they sit on the sidelines and they wait until it gets up to here before they make a move, and then they kind of see how it reacts. If it plays out like it's like it's going to take off, then they get in. And to tell you the truth too, but if people play a lot of options in AMC, and when it gets in the SOS thing, what smart money does, I'm just going to explain what smart money does real fast. When it gets up into this region, when it looks like it's going to make this move, however long it takes, that's when they get in with calls, and you'll see calls go up. But they get in the money calls, and they get out of the money puts, and that's to hedge what they're doing. They get out of the money puts, and they go at least a month out, right? Smart money goes at least a month out, and they get smart money calls, which are in the money calls, and then they get smart money puts, which are out of the money puts. So if it decides to go the opposite way, they could get out and still make their money back with the puts. And if it takes off, they just let their puts die. I hope that makes sense. So it's a way to hedge your bet. Now I'm a little dumb money when it comes to that, because I don't usually hedge my bets. Occasionally I do. I did on when AMC dropped on the one I don't know, was this one? Yeah. But they had switched over to APE and AMC, and my institution took my puts away. I'm not joking. They took my puts away. Let's just say that I no longer use that institution. Yeah. It took away my hedge. But anyway, yeah. I just wanted to put that out this morning. It's holding up pretty well. I think Booksy's probably going to do a pretty good job of keeping everybody informed. I'll probably do more once it starts to take off and do a sign of strength. That way, I'm not wasting everybody's time having to watch my YouTube thing. But I do appreciate the people that are watching it, and of course, I'm trying to answer all the comments. Just extremely busy right now. Unrelated. But today's probably a good day if you're looking at getting in. It may not come back down to this level again during this, because sometimes it'll do a ascending accumulation, which means like it'll just kind of clear out a whole zone and then go up. So as long as the implied volatility is coming down, as far as calls go, I still feel comfortable with them, especially if you go far enough out. Now, if you don't, the stocks are still cheap enough to buy here, and one of the things you can do is if you have 100 cents, you can sell covered calls. So say you buy them down here and it takes off up here. You could sell a call option for every 100 that you have. What I would do is like try to sell it close to in the money when it does a sign of strength, because the implied volatility would be through the roof at that point. But when it calms down, you can buy back your call for a much cheaper price and still have all your shares. And then you've just made money while you're holding on to it, like extra money. Just a word of advice, because all this is educational and entertainment purposes only, and I am super tired and need to get going and have some coffee and do a whole bunch of stuff today. But I'll catch you guys all on the flip side.